Hi, everyone. I'm Ivan Biuki, and welcome back to Wall Street Silver. Our guest today is Keith Neumeyer. Keith is the CEO and founder of First Majestic Silver and chairman of First Mining Gold. Welcome back, Keith. And we also have Jim, of course. He's usually on Zoom, but now he's there in person. Welcome back, everyone.
Hey, Ivan. Hey, great to see you, and great to have Jim in the office here in Vancouver, First Majestic head office, and it's fantastic with both of you. Appreciate the time.
Yeah, so Keith and I have been here socializing and catching up on things, and we I happen to be in Vancouver right now, and I was going to do this by Zoom with Keith, but Keith said like, come on into the office and let's catch up on things. So thank you very much. So one of the things we wanted to catch up on with you about is the big J.P. Morgan trial. Mm-hmm. That's been huge in the news. The silver audience is really into what's going on with J.P. Morgan. There was recently a conviction for spoofing, I think, and one of the key things was it's not just the low-level employees that are being caught and convicted now,
right?
But the management. This was all about the culture, and I wanted to sort of get your take. Number one on the trial outcome, the convictions, and what are they missing? What are they not catching? That's really going on under the hood for the manipulation in silver.
Well, first off, I think I followed the trial, and I can't admit I followed all of it, but the segments that I did follow, these individuals were being told by their bosses what to do, and there's collusion from the top,
right?
And it goes all the way through, their trading department, and not just there, it goes all the way through the other banks as well. I worked on the floor of the stock exchange here in Canada for 6 years. So I know a lot about trading, and I know, how the system works. And, these traders are unfortunately being signaled out in a system that in itself is corrupt. And the regulators, good on them, for getting to where they are today, at least, bringing it to the forefront, because a lot of individuals out there, even mining executives out there, have said that manipulation does not exist, which I've always contended that it does. And now, finally, we have some, convicted individuals that actually show that this manipulation has been going on for many, many years. What it does not include, is the phone calls that go on between these banks and the manipulation that occurs among the banks as a collective, group, manipulating these markets. This is a bank that's been convicted, yet there's many, many individuals, not only more senior to these individuals, but also the same, traders in other companies and in other banks that have not been looked at.
Wow.
Unfortunately, they're the wrong people to send to jail, though. The banks use these individuals pawns, and they blame them for whatever they're blaming them for. But they've been told what to do. Bosses, right up to the top levels, have been told what to do. So, these trading techniques are very common, and they were used back in the '80s when I was on the floor. And these are standard trading tools. If you want to move markets one way or another, this is one method of doing it. The other method is to get on the phone with other banks, to try to, increase your strength, because, you acting as a lone trader in a single bank, and you're against a market, you might need some help, some buddies that you drink beer with at night. So you're going to phone up, 4 or 5 of the other traders at the other banks on Wall Street, and you say, hey, help me out. I need some help here. So they're going to help you out on your trade, to make sure your trade is profitable. And all of a sudden, you win because, you're colluding with other banks. That's what this is missing. And that happens on a regular basis.
Yeah. And I think that's the key thing here is it's not just one bank. It's not just JP Morgan. These guys are getting together and they're putting a lot of order. Keith and I were talking about this before the interview, and he was sort of explaining to me and walking me through the mechanics of how it actually happens, whether it's JP Morgan getting together with Bank of America or a bunch of different names, the big ones all. And how did you put it? They put a bunch of orders above the market just to scare off the hedge funds or retail. And then when they see all these huge orders above the market, then and they do it during these thin trading times when they're most likely to have the most impact.
Yeah, like, if you've got sophisticated systems, and most people probably don't, but it's called level 2. So if you've got level 2 quotes, you can see above the market and below the market. And so on my system, I can see all the bids and all the offers on anything that I'm interested in looking at. So all of a sudden, you're a hedge fund that's long a couple million ounces of silver, and you're expecting, obviously you own it for a reason. And all of a sudden, you wake up one morning and there's a wall of offers coming into the system, and you don't know if those orders are real or not. As a normal investor, you're going to look at that and say, "Holy shit! There's a bunch of sellers that have just shown up for some reason. They must know something I don't know." So you panic and you start selling your position, and that creates a snowball effect. And then other hedge funds also catch on. We better get out of this position. And these spoofers, or manipulators, whatever you wish to call them, they keep moving their offers down because the market moves down to try to suppress it even further. And there's a limit to everything, and they know they trade these markets on a regular basis, and they're sitting there. They're the buyers of last resort. So unfortunately, they're taking all this metal, paper metal. It's not actually metal; it's paper metal off of these traders or off of these investors, and a lot of it's retail guys that have a view. And you and I are all bulls on silver. So if you're some retail guy that just happened to buy a couple hundred ounces or 1,000 ounces at $22, $23 an ounce, next thing you wake up and the thing's 21, and you're going to lose your entire investment, you might just turn around and sell it, as funds do. But these manipulators, these spoofers, these banks are there on the bid, just buying it all back. And when they get satisfied with the amount they want to purchase, they just pull all their offers, and the market goes back to some of their normality, and they've made their enormous profits and screwed everyone else in the marketplace.
Yeah, it's we all know what's going on, but the question is, how do you make it stop? Do you think this sort of conviction, a couple of guys at JP Morgan, mid-level guys, it wasn't top people, it was a couple of mid-level trading desk managers, traders who actually get convicted here. Do you think anything changes by this, where people who are currently on these desks are like, well, that could happen to me, I'm not going to do it? I mean, or is anything going to change?
Well, the regulators, in the United States, because that's primarily where most of this happens, they have the teeth already. They can do, the rules are there. They can say, okay, JP Morgan, I mean, I don't necessarily want to pick on JP Morgan because they're not the only.
I want to pick on them.
I think, look, I worked for 3 banks, so in the 80s, so I'm very familiar with the banking system. These traders are trying to make money. Their job is to make money,
right?
And they're splitting their profits with the bank, and they're taking some of the profits in their own account. That's what they're hired to do. So you got to give them some credit. They are making money. But there is someone on the other side of the trade that's losing money. And that's where they forget, right? Because they're happy to make a profit. They don't realize they've just screwed some, grandmother, in Missouri, that doesn't cross their mind. But nevertheless, the regulators could tell, in this case, we're talking about JP Morgan, you cannot trade this market for X period of time, because this is not, forget about a financial penalty. They just got fined $900 million, a few months ago, and has that helped? It's a drop in the bucket. You have to take them out of the market. Say, look,
be banned from trading, be banned from managing SLV, or being a custodian for SLV for
that.
I mean, they just banned from the market for 3 years, or something like that.
Whatever the number is. So you're out of this market.
That's crazy.
You're done. And that will make the change. But the regulators, I guess, I'm hoping they'll get there, but we'll see.
So silver had this huge, it's been a down market for months. We got as low as 18. at the worst point. We're back up to 20 now. You know, you're in this market. You have the industrial buyers who are contacting you. You told me about something that we won't go into, but you got people coming at you all day long trying to find silver, source silver. Are you seeing any sort of changes in the market overall in terms of demand? Is it soft? Is it strong? You know,
the problem is that, you know, there's two markets. Okay, there's the commercial market, which is, you know, where there's a view among the big institutional investors out there, the hedge funds out there, that we're going into a recession. So you know, copper's been down, lead, zinc, you know, the grains, you know, corn, and you know, blah blah blah, and even oil, you know, it's now finally cracked 100. Now it's today, I think it was like 88 or something like that. So you know, commodities, there's a view among, you know, the 5,000 or 6,000 hedge funds around the planet that there's a sell on commodities. So you got to short commodities, right? And that's the trade. You know, the dollar has been strong. The world economy is weakening. So if that means commodities are in less of demand, okay, fine. I call it bullshit. It's just sentiment. Sentiment is sentiment. These markets are not. You can't tell me that, you know, week over week there's, you know, less demand for silver,
right?
Less demand for corn. You know, this is just hedge funds thinking, okay, we're looking 6 months ahead, and we're trying to figure out what supply and demand fundamentals of whatever commodity they're trading. And so that's what moves markets. But from a real fundamental perspective, you know, the future for silver is just amazing.
Yeah.
You know, we have craziness going on. Like we have the automotive sector. You know, I threw some numbers out just yesterday. We could be approaching 100 million ounces of silver this year just in the electric vehicle sector.
Silver is 120 million ounces and rising, right?
A guy in the UK said 140 million ounces.
Yeah.
Right. So we, you know, we're mining. The mining industry will produce something in the order of 850 million ounces of silver this year. And you got solar panels and electric cars consuming 250,000 ounces or 250 million ounces of silver.
And those markets are just getting started.
Yeah.
I mean, they're having nowhere to go but up.
Oh, when I put First Majestic together back in 2002, those two industries didn't even exist.
Yeah.
Wow.
And I actually, I've seen some studies that the next generation of solar panels that are coming out that are more efficient actually require, we've been on a downward trend of silver and solar panels, the silver per megawatt. But the next generation, actually, the designs require more silver, not less silver. I don't know if you've seen the same, but you know, we'll see if that has any sort of impact. But
there's been a lot of, you know, trying to, you know, they've used aluminum, they've been using other metals to try to, you know,
try to substitute the precious metals out of it.
Yeah. And there's an economics of it. I don't know the exact details, but they're not going to get lower.
They're not going to go lower. Silver demand's just going through the roof between now and 2030. Yeah. But what are the other areas I wanted to, you know, you're obviously CEO of First Majestic. How are things going there? I mean, you have a lot of investors that are watching things. The cost side, I know, is coming down for Jarrett Canyon. You've got your mines in Mexico. You know, what's the outlook there for First Majestic that people need to be aware of?
You know, it's you know, I look at First Majestic as, you know, we're turnaround artists. You know, we buy other favorite assets and we turn them into interesting, profitable companies. You know, my biggest beef is I can't find a silver company or a silver mine. You know, we you know, there's lots of gold mines out there, and I love gold. Don't get me wrong, but you know, this year we'll produce something in the order of 35 million ounces of silver equivalent over 3 mines, 4 mines, pardon me, 3 in Mexico, 1 in Nevada, and you know, next year's production will be, you know, pushing 40 million ounces. So, so we're growing quite nicely. I always want to try to continue to build a business. Looking, you know, through M&A. Inflation is driving us a little bit crazy. Fortunately, we're seeing some turnaround. You know, energy prices, as your listeners know, have come down a little bit.
Right.
Some of the chemical costs come down. Employee costs, you know, are still, you know, pretty prevalent. You know, getting good quality mining staff is always an issue, and it's always a battle out there to get good people, particularly in our case where we want to grow. We're growing Jarrett Canyon. You know, we produce about 100 million ounces this last year, we expect Jared's going to produce something towards 200,000, pardon me. I think it's
That's crazy.
I was gonna say that's big. That's a big amount.
big gold and silver, but apologize. No, 100,000 ounces of gold last year, 200,000 ounces of gold by 2024. So it's almost going to double in size in a couple of years. Santa Elena, we put out numbers of 7 million ounces in January of 2022. We've upgraded that to 9 million ounces in July, which actually could get up to almost 10 million ounces by the end of this year. So that's a growing asset, and it's going to be bigger next year. Could potentially over the next year or two become our largest mine. San Dimas is growing. So we've got a lot of great things happening. It's just metal prices are really frustrating.
Yeah.
It's just, silver drives me crazy every single day.
If we ever get our bull market in silver and gold, I mean, you guys are perfectly just to,
Well, I've been asked about gold, like, why the heck because I'm a silver bull.
Right.
My favorite metal is silver, and I think I've been the first to coin the phrase triple-digit silver, and I know other people now.
Yeah, you sent us a triple-digit silver shirt.
And the T-shirt.
Yeah, that's right.
Silver that you sent me for Christmas.
Yeah. Fortunately, there's some other people now, following the same guy. I actually saw someone the other day call for $500 silver. So
it's like a competition. You got to go up to like 1,000.
I'm not quite sure I'm at that level, but
right.
Give me $50 first, and we'll see what happens. But having gold in our portfolio is my point. It really gives us stability to our business, because I can tell you, when we were 70-80% silver, and we're budgeting at call it $20 an ounce, and all of a sudden we see $14 an ounce. We have to hire, fire, stop programs, and then next thing we know, we have $25 silver. We start rehiring, expanding the business, and so on.
Right.
Gold gives us that stability, so it allows management a lot more flexibility.
Another company that you really have been behind, and it's been one of the best performers in the market, is Snowline Gold.
Oh yeah.
And that one's you're like I think a 6 or 7% owner of that company.
Yeah.
I mean, you're not a manager of it, so I know you don't have the inside information, but that's been like up 300%. I don't know the exact number, but I just saw the stock. It's been a huge performer this year. What is so different about that one that it's taking off, where a lot of other exploration companies haven't been performing this year?
Yeah, it's an interesting question. I think it comes down to people. I think first, I'm always willing to finance entrepreneurs, young entrepreneurs. At 62 years old, I've been in the mining sector for over 30 years now, 35 years, I think it is, and every once in a while, I do decide to assist management teams, and this particular team, Scott Riddell and his dad Ron, I met them a couple years ago, and I quite like Scott. He's just an amazingly intelligent individual, extremely well educated, and he came to me with this portfolio, and I looked at it. I showed it to a couple of my friends and associates, and we looked at it, and we just said, hey, this is like a really heck of a shot. And Ron, Scott's father, spent 30 years staking this portfolio, and they had glimpse of trying to get it public, and they never really had access to the public markets because they just not known anyone to really assist them. And I decided, back in, I guess about 18 months ago now, or close to 2 years ago now, that I would help finance them. So, we had helicopters in the air before, they went public, and I was helping them finance staking and expanding the land package. And, I introduced them to, the lawyers and the accountants to get this thing happening. And
nice.
They had the drill results that have really justified it. I mean, it's really,
first we had to get it public.
Yeah.
And you asked me, what was my involvement? So that was my plan. So once that happened, it was just faith on people.
Yeah.
What they were saying to me sounded pretty legitimate.
Yeah.
And I looked at the rocks, I looked at the core. Well, actually, it wasn't even core, it was just grab samples. I looked at that and said, wow, this is pretty interesting stuff. Then lo and behold, they drilled, 21 holes last year. And I think every single hole hit gold.
Yeah.
Wow.
I'm pretty sure.
And pretty high grade. I mean, really impressive stuff.
Pretty, yeah, and a lot of it VG, and visible gold for your audience. And this year they've had a, don't get crazy because we still at the mercy of Mother Nature.
Mhm.
You know what it looks like according to all the people that look at this core. It looks pretty interesting stuff, but it all comes down to the lab. So
Right.
we're all waiting for these assays to come out, and if it meets market expectations, it's already been exciting.
Understood. The other thing we wanted to ask you about, you're known for First Majestic primarily, but you're also chairman of First Mining Gold.
Mhm.
And so, that's it's a company that you're very proud of. I've heard you talking about it a lot.
Mhm.
What's going on with them right now that you're excited about?
Yeah, well, thanks for asking. And like I had limited attention. First Majestic is my full-time job, and more than my full-time job, as you can imagine.
Mhm.
And then Snowline, is something that's passive. I've got an investment in that. I'm not involved in management in any way. I'm just there as a consultant if they ever decide to pick up the phone, if they ever do. But I'm a significant investor, obviously. And in the case of First Mining Gold, though, that's quite different. I actually founded that business. Going back to 2014, I looked at the gold sector, and the gold sector was just enormously cheap. I couldn't believe how cheap ounces were in the ground, like less than $10 an ounce. So I had a group of individuals who I trust, go through the space and look for key assets. And we found that the Canadian, Eastern Canada, Quebec, Ontario were really the cheapest assets out there. And we created a list, and I targeted, 10 companies because we actually broke it down from over 100 companies, but we broke it down to 10.
Mhm.
Went after those 10 companies. We ended up buying 6 of those 10 companies in a 15-month period from early 2015 to mid 2016, creating First Mining Gold, of which I'm the chairman. It had a market cap of 600 million. Has peaked today. The market cap is something like sub 200 million. We just bought another asset in Quebec. So we have the core asset is a 5 million ounce asset in Ontario called Springpole. It's one of the largest undeveloped gold assets in Canada. It's in permitting stage, which is the most boring stage, and this is why we're trading at such stupid prices, because investors just get super sick of listening about permitting. And people who know Lassonde, look at the Lassonde curve. You heard of the Lassonde curve?
Yep.
Yeah,
Our audience knows it well.
Oh,
Discuss it often.
oh, okay. Well, then in that case, so they're at the bottom of that Lassonde curve. And same with this new acquisition called New Marquet in Quebec. We've been negotiating for 7 years.
Wow.
On this asset. And it's 2 ladies in Winnipeg who owned it. And, they're very nice ladies. But they have passion. They've owned it in their family for decades and decades, and they finally gave it up to us for a very large position in First Mining Gold. So they're now significant shareholders of our company, and we're going to try to develop this. And to have a 5 million ounce gold asset in Quebec and a 5 million ounce gold asset in Ontario, that's pretty rare.
Yeah,
you don't see that.
Yeah. Well, Keith, thanks for inviting me.
Yeah.
Hey,
Appreciate it. You got a great place here in Vancouver. Thanks for chatting with us. The audience loves to hear from you all the time. And we're definitely going to do it again later this year, as the market develops.
Oh, great. And you're welcome anytime, Jim, in the office. I've been great seeing you again.
Yeah, we're going to get Ivan out of Edmonton and get him over here to Vancouver.
Yeah, I'll get over the border. Don't worry.
We'll get 3 of us in the office, or we can do this as a 3-way thing.
Yeah.
Thank you guys so much.
Next time.
Yeah, okay. Thanks.